Good morning, good afternoon, and good evening to all. Myself, Vaibhav. I welcome all of you to today's session of Visual JForex, in which we will continue our algorithm development work using the indicator on balance volume, which is shortened as OBV. As the name suggests, it is related to the volume data, and we utilize the volume information along with the price action data to see the momentum, whether it is bullish or bearish, and trade accordingly. So let me take you to the Visual JForex board, which has been developed by the Dukascopy Bank SA. We had seen in last two sessions related to OBV these developments so far, where the instrument subscription has been done with the Euro USD being the instrument of choice. Afterwards, the position amount was defined at zero. I have added these OBV blocks of the 4 hourly candle period with varying shift values. Shift values are indicative of the candle period. This is the last 4 hourly candle, and this is the third last 4 hourly candle. These two OBV blocks are of 15 minutes each with the varying shift values. And to look at the price action data, we are also taking the help of these two 15-minute historical candle along with the two 10-second candles. And on the lower side, you will find this calculation expression used to define various variables which we have utilized while defining the input parameters for the trade command block. And on the lower side, these are the conditions for the execution of the buy trade, which we had discussed in details in the last session. So now this session is going to be dedicated to the building of the sell side of the equation. This space is empty, and here we will be adding the blocks for the defining of the logic for the execution of the sell trade with the help of this OBV indicator. I will give you the explanation of the underlying logic. This is the Euro USD chart with the candle period of 15 minutes. We are looking for the divergence in the price action data and the OBV output values. For sell trade to execute, we need the OBV value to start declining. So for that, we will be comparing the OBV output value over last 2 hours. We will compare the last 15-minute OBV output to the OBV output 2 hours back, and it should have started to decline, but the price action should still be on the rise. And if that sort of divergence is taking place, we will look to initiate the short sale with the order being placed on the lower side, provided the 4 hourly conditions are in place. On the 4 hourly time frame, we need the trend to be on the our side, so we will need the momentum to bearish on the larger time frame. And for that, we are going to compare the OBV output of the last 4 hourly block with the OBV output of the third last 4 hourly block, and it should be in decline. And only in that case we will go ahead with the order execution if the 15-minute conditions meet our criteria. So that's how the logic is. It is fairly simple. We will be looking at the price action data also. And as I said, the last 15-minute block should have closed higher compared to the 15-minute block 2 hours back. We will take the difference, and whatever is the difference between these two closing values, we will take the difference and multiply it with 3 to define it as the stop loss. And then whatever is the stop loss value, we will define multiply it with 2 to get the target price data, and order will be placed on the lower side. Only if the price starts to decline later on, the execution should happen. So we will be going with the order validity of 2 hours, and we will have the order placed on the lower side, and that will be determined by taking into consideration the difference between the two 15-minute candles of the Euro USD. So let me now get you back to the Visual JForex board. Here we will need to add the if blocks. We are going to need 5 of these as our formation is going to be symmetric. While defining the conditions for the execution of the buy trade, we had taken 5 if blocks, so the same amount of if blocks will be needed now, and it will be followed by pending open trade command. First condition we need is that OBV output value of the 10 minute, not 10 minutes, sorry, 4 hourly candle period to be in decline. So OBV 10 needs to be less than OBV 14. First input less than second input. All right. Then we consider the 15-minute candle OBV data, and here the OBV output of the OBV 15 should be in decline. So we need OBV 15 to be lower than the OBV 16. First input less than second input. Then we consider the price action data, where we need the candle 17 close to be higher compared to the closing value of the candle 18. So we compare candle 17 close and candle 18 close. For that, we need to look into auto-created variables. And here this should be first input greater than second input. And as soon as price starts to drop below the last 15-minute candle close, we will go ahead for the execution of the trade provided these three conditions are in place. So we have to compare the closing value of candle 19 and candle 20 with the closing value of the candle 17. So candle 17 candle close is going to be common input for both these blocks. And we compare it to the candle 19 candle close. First input should be less, and candle 20 candle close. First input greater than second input. So second last 10-second block should have closed higher, and then last 10-second candle close should have been lower compared to the closing value of the last 15-minute candle. And if these conditions are fulfilled, we will go for the execution of the sell trade, which will be a sell stop order, sell stop by us. And now we have to define these input values for this trade command block, which we will do one by one. Order validity will remain the same as the buy trade. So I will take this previously defined variable of order validity. Order validity was, I think, 2 hours. Let me check it once. Yes, it is 2 hours. Now we have to create variables for defining these input parameters, which we will do one by one. Prior to that, I will place these logical blocks on the lower side. Okay. Now we start defining the variables for the trade command block, and first thing we have to do is get the execution price, sell execution price, which will be lower compared to the current price. So for that, we have to look at the difference of the last 15-minute candle close and the 15-minute candle which had closed 2 hours back. Pardon me. All right. So we need the difference between candle 17 candle close and candle 18 candle close. Candle 17 candle close should have happened higher. So we take, I think we should have, no, that condition is already in place. So no worries. We have to simply deduct candle 18 candle close, which was lower compared to the candle 17 candle close. So for that, I'm going to look into auto-created variables. Candle 17 candle close minus candle 18 candle close. So this is going to be A1 minus A2 and this will be sell execution price SEP. I will detach this calculation expression flow and join it on the lower side. Okay. Oh, I have committed a error of omission actually. This is the difference and this is not going to be the sell execution price directly. This is the sell side difference. All right. And whatever is that difference, we will deduct it from last tick price. So on tick, last tick bid minus the difference between these two 15-minute candles. So this is now going to be sale execution price A1 minus A2 SEP. Oh, E1 I will place this newly created variable here. Now we have to define the stop loss and take profit, which are going to be in proportion of the difference between these two 15-minute candles. So we have this difference. We have to simply convert it into the integer data type after multiplying it with 3. So whatever is the actual difference, we will take thrice of it, and that will be our stop loss in integer data type. So I will now multiply it with conversion factor and multiplying factor 3. So this will be A1 into A2 into A3 and this will be our stop loss. Slippage 2 pips is good enough. Default instrument remains as it is. Default trade amount, I will change it to 0.1 million. You can keep it as per the equity in your account. Stop loss, we will create a new variable and assign it to the calculation which we have carried out in this block. All right, and I will also create new variable for take profit. And whatever is the stop loss, twice of it will be the take profit. So I have to just get the required variable. TM has 2 as its value. So we have to get A1 in 2 A2. And this will be, oh, we had already created this variable, sell take profit, and that's it. So with this, we have defined all the required parameters for the execution of the sale trade. And as you can see, our formation, our algorithmic setup is symmetric. So both these buy side and the sell side are more or less mirror images of each other. We simply have inverted the conditions for the execution of the sell trade from what we were looking at for the execution of the buy trade. So that's it from my side for today's session. If you have any query or any idea to share, you can write back to me in the feedback section. For further coverage of the market developments, do check out the Dukascopy Analytics page. We are also available on the Facebook. And for carrying out the testing on the historical data, you will need the help of Visual JForex platform. JForex platform. This is the Visual JForex itself, and all these links have been provided in the bio. And if you want the notifications for this webinar, please write to it in the Trustpilot pilot review, or you can even give out the suggestions to the Dukascopy Bank support. So thank you all for joining in. See you next time around. Till then, goodbye.